Hi everyone, welcome to our latest edition of the Catapult Wealth updates. The year's got out to a busy start. This particular edition of our video I would like to talk about and concentrate on the reporting season that's just passed us by. A lot of the companies have reported their 6 monthly results up to the end of December, and I just want to run through today what the overall picture of these results were, and then more specifically what some of the companies had to say about their trading results till December. So as a broad overview, the reporting season was actually on the whole very good. Better than average, a number of companies reported good results, or better than the market expected. This has led to, it's probably been reflected in the All Ords Index by seeing that that's held steady around this 5,300 level at the moment, which it did have a slight dip in January, but has bounced back quite quickly. One of the interesting things that's come out of the reporting season has been the dividends. Certainly you've seen much better dividends out of the banks. The big mining stocks, you've got much better dividends out of the big Woolworths, Wesfarmers, and so on. And it's certainly been a very noticeable difference. One of the major reasons for this one major reason is that their balance sheets are in very good shape, so they can afford to push cash flow back to the shareholders. One of the secondary reasons is that they're getting more and more confident about the outlook for the future, and therefore more with better visibility over the next 2 or 3 years, they're more comfortable passing money back to shareholders. The outlook statements were generally very good for the next 12 months, particularly in the building area. A lot of those companies, such as Lend-Lease, for the first time in a long while, mentioned they have visibility and predictability probably for the next 2 to 3 years of their order book. Retail sales numbers just recently announced were very good, which is a further sign that the economy is starting to kick into gear here in Australia. One of the key things that's come out of this reporting season that I'd like to just mention to you all is that the New South Wales economy is one of the largest, just the New South Wales alone is one of the largest economies in all of Asia. And we forget here in Australia how important New South Wales is to making sure that Australia has a good economy. And certainly we're seeing the New South Wales economy perform very well. Victoria's so-so, South Australia is not doing much better than Tasmania, Perth's a bit up and down with the mining sector, and Queensland's starting to recover out of the tourism industry with a low Aussie dollar. But at the end of the day, that New South Wales economy is starting to perform, and that's a good sign for the broader Australian economy. The Aussie dollar impact from the results, certainly we did notice some impact on the profits, but it wasn't a big impact. I think that Aussie dollar drop that we've seen in recent times, it will be more noticeable in the 30th of June results, certainly more than we've seen in the last 6 months. Interest rates remain low, so a lot of companies had lower interest costs, which helped their profitability. And the last point I'd like to make about what was noticeable out of the reporting season was the fact that we're seeing unemployment rise here in Australia at the moment, which is a two-edged sword. We're seeing that means, well, it's obviously not great for people who are looking for work, but at the same time, as an employer of people and someone looking to control wage costs and make sure that you can get the right people at the right times at the right price, that is certainly happening. And wage costs are starting to come under control here in this country, which is helping a lot of companies' bottom lines. In particular, the stocks. As I mentioned earlier, BHP, Rio Tinto had great results. Woodside Petroleum was a good result as well. And remembering they pay their dividends in US dollar terms, so because the Aussie dollar's dropped and their dividend went up in US dollars, you saw between a 20 and 30% increase in your dividend this time around. Banks' results were okay. Dividends there were very strong. Mining services companies such as Monadelphous, United Group, Worley and so on, they were not great, but they weren't as bad as people were thinking, and so you've seen a slight recovery there. QBE looks like they've finally got to the end of their profit downgrade cycle, and their result wasn't as bad as people thought. Coca-Cola has some work to do, but they never really turn in 2 bad years in a row, so I think that you can expect better news out of Coca-Cola. Woolworths' result was excellent, better than expected. The AMP result was actually slightly better than expected due to their growth in self-managed super funds. Telstra result was fantastic. First time we've seen an increase in dividend from them in 6 years, which is a clear sign that I think they're on the move upwards as well at the moment. And the other ones to mention that were very good results, Australian Stock Exchange was a good result, with market turnover still increasing. Computershare was a good result with the amount of new floats and new issues going on this year. And Brambles was a very good result as well, and you're seeing that stock start to finally kick into gear. Overall, it's been a good reporting season. Certainly still believe the best of this year is ahead of us, and looking forward to catching up with you next time just to help give you an update in a couple of months' time of how things are travelling. Thanks for joining us here today, and I look forward to talking to you in a couple of months. Cheers.